Okay, guys, I'm going live on my timeline here today to try to get a little more interest in what's going on here. So as you know, I have the group. I have the Forex Smart Money Trading Academy group. Probably gonna change the name of this here pretty soon to Forex SmartMonics Trading Academy. But we have the group here. What happened there? We have the group here right here. And so if you're not a member of this group, make sure that you drop me a message so I can send you the link so you can join. Now there's actually only 2 days left to secure your spot in our SmartMonics trading community and save $50. So 2 days left. That offer expires on Monday, tomorrow. I have some live sessions here. If you join the group, you could watch these right away. Trade alert summary from last week. I mark up all the trade alerts that come out, what would have happened with them. Last week, we had 6 winning trades. I'm sorry, there were 5 alerts that came out. 5 of them, let's see, 6 alerts came out. 5 of them were winning trades, and the one was a no trade because there was no confirmation to get in. So today, here's another trade alert video, live video that I did back on 3/23. So there's tons of information in this group, guys. Tons of information for you. Even if you don't want to join our trading community, I do post, charts of when I'm going to take trades, once or twice a week. I'll post the trade alert, I post all the trade alerts, obviously, in the group, and I'll post if I'm getting ready to take a trade. If I have a limit order set on a trade, I will post that in the group. And obviously, if you're not a member of our community, then you won't have access to the confirmations that we use on the lower time frame to get in the trade, but you can use your own confirmations, whether they're bearish or bullish candlestick patterns or double tops or double bottoms inside of our liquidity blocks that you'll see I have marked up on the charts for you. So let me just show you how this SmartMonics works. So I'm going to make a better PDF file of this, but I just wanted to make this real quick to go over it today. And I'm going to also, like I say, make a PDF, and I'm going to put some examples in here. I have examples of all the trades, but I don't have examples of the confirmations right now on the harmonic scanner. So once I get those, I'll be able to finish this, make a nice PDF, and then I'll do another video as well to go over the whole thing. But just so you know what we're doing right now, basically we'll wait for a new scan to come out. And so that's with IM Academy, and that is our harmonic scanner. So you obviously have to be a customer of our community to get access to this. The great news is, though, you can save $50 if you get started by before the end of the day tomorrow, Monday, March 27th. You can save $50, and you have 7 days to try everything out. So you could try out everything in our community, or our proprietary indicator, our ATH indicator, which is one of the confirmation tools I use to take the trades, along with the shift candles on the harmonic scanner. I'm going to show you some examples of that here today, just real quick, because the purpose of this live session is just to tell you about our SmartMonics strategy and basically how it works, right? And what we're looking for, before we take a trade. But like I said, you need to be a customer of our community in order to get access to a harmonic scanner. You also get access to Manny. He is the lead educator at IM Academy as far as SmartMonics goes. He goes live every Tuesday, Wednesday, and Thursday, 8 a.m. Eastern time. Our community goes live 5 days a week, Monday through Friday at 12 p.m. Eastern time. So, like I said, you'll get access to all of that when you join our community and become a member. You could, however, get a free week of training with just our community. If you haven't gotten that yet, let me know, and I'll send you the registration links for that so you can get started starting tomorrow. That's just a free week where you'll have access to our community and our training, but you won't have our live training 5 days a week, Monday through Friday, 12 p.m. Eastern time. You won't get access to all of our training. You won't get access to our indicator at that time. You're just able to check us out, see what we're doing. You'll see how we're using this SmartMonics strategy using the harmonic scanner. So step one in this is wait for the new scan to come out. So we use the 1 hour scans, guys. The reason we use the 1 hour is because it enables us to then take our trades on the as low as the 15-minute. Some people do go all the way down to the 5 minutes to take trades. I don't like to do that. I like to use the 30-minute and the 15-minute as my trigger charts, right? And the 1 hour chart is the chart I use for the harmonic scans to come out, and also the chart I use for my higher time frame trend. And I'll show you what I mean by that here in a second. But you could see all the scans that came out last week, and there were actually four scans that came out on Friday. That was 2 days ago. Obviously, it doesn't work over the weekend because there's no forex trading over the weekend. So you could see the scans that came out here on Friday. I can show you. This is the USD CAD one. And again, Manny marks up these 1 hour charts for us during his sessions on Tuesday, Wednesday, and Thursday. So sometimes you come to these scans and you'll see an area actually marked up. Like if you look here, let's see if I could find one for you. Okay, so we got to go to one that came out earlier in the week when he was actually on here. So you could see this scan came out here in CADJPY. This was a buy scan, and Manny marked up this area down here for us. This is the 1 hour area he marked up. And if you scroll over, this one goes pretty far back, but you'll see what he's looking at here. Basically, he's using this 1 hour banker candle right here. It's the last down candle before this big move up. And he uses wick to wick to identify the order block, or the liquidity block, as we call it. And he uses a halfway point to identify where the point of interest line is. And that's where you would set your alert. Now, I use the open of the candle itself. So in this case, it's basically right almost at the same place. It's a little bit closer to where price was at. But anyway, you could see that, see where we're at here, scroll this back over here. That's the area that he had marked up there. Okay. So you can get those areas again, but you have to be a customer of the community to get access to the harmonic scanner. But I will show you them as well when I do my live sessions in the group, and you have access to my group for free. Okay. So, and that's the Forex Smart Money Trading Academy group. So if you're not a member, make sure you let me know so I can send you the link to join. But basically, we go here, we get a scan. Now, once we get a scan, let's just use this scan here. This is USD CAD, and this is basically a scan telling us to sell this. Okay. We know that because the D point is up above, not down below. And we can also see that it's giving us a couple entry areas and an invalidation zone. Now, guys, for our strategy, we don't pay any attention to those entries or that invalidation zone. We look for our own entries by identifying the 1 hour liquidity block or order block. And then we use our own confirmations once price moves into that area to decide to take the trade or not. Now, Manny does have an area marked up on here as well. See? So he was waiting for price to move up into this area before taking this down. Now, we do, however, pay attention to these take profit levels here, and the scan gives you 3 different ones. We like to go with the first one because really that's the only guarantee that you have from the scan, is that price should move to this first one. So we call that take profit 1. So we don't really pay attention to 2 or 3. So really the only thing we pay attention to here on the right hand side is our idea goal 1, which is our take profit 1. Okay. So we get the scan. So what I do then is I go to my trading view charts. I like to mark up the charts in trading view because it's a little bit harder to do it here on the scanner, and you have to save each one and keep pulling up that save one in order to get access to your markups. So we like to go into trading view and do this. So again, we're looking at the 1 hour scans. So I want to identify what is the 1 hour trend. And that's the higher time frame trend. When people say higher time frame trend, they're talking about usually the 1 hour, 4 hour, or the daily. In our case, since we will take trades on the 15-minute, right? It makes sense for us to use the 1 hour chart as our higher time frame trend to identify the trend and also the order block. It also makes sense because we're using the 1 hour scans on the harmonic scanner, right? So perfect sense, right? Everything's logical. We want to stay logical. We want to keep it simple, right? So when I look at this, I have plotted on here 3 moving averages. The red one is the 13, the green one is the 62, and the blue one is the 200. They're all exponential moving averages. I like to call the red one the salsa, the green one the guacamole, and the blue one, for lack of a better food color, I'll say water, since the ocean's blue, right? Now, what I'm looking for primarily is, and we use this 1362 for our 62 trade. That's one of our trading strategies. Other than SmartMonics, we also have a 62 trading strategy, and we show that strategy every Monday live on our sessions, okay? But for this, I'm just using it to identify the trend because it's a really good way to identify the trend. And when I say trend, I'm not talking about the long-term trend on this 1 hour chart. I'm talking about the most recent bias, right? What's it doing most recently, right? What is price doing most recently on this chart, right? And so since the 13 is above the 62 and both the 13 and 62 are above the 200, that tells us that the current bias on this would be bullish, okay? So if the harmonic scanner is telling us to take a sell on this, I really don't want to do that, right? However, so that is, if we go back to our strategy here, right? We wait for the scan, then we check the higher time frame trend. So guys, I like to stay with the higher time frame trend. So since this scan is telling us to sell, and my higher time frame trend is telling us to buy, I would more than likely pass on this trade. Okay, now you can see I do have the chart marked up for various reasons, and the reason is this: the only way I would disregard this rule is if Manny has marked up a 1 hour area for us. Okay, and you have to watch that. You have to make sure this is a 1 hour order block, because sometimes Manny will mark up mitigation blocks, and they're a little bit different. I don't like to trade them; they're a little bit more advanced. So if we do scroll over here, we could see that Manny does have a valid 1 hour area marked up here. He's using this 1 hour banker candle right here, okay? Now price already did move down, but it didn't break this structure over here, and then it came back into the area once already, right? So he does have a valid area marked up. So because Manny has a valid area marked up, and because Manny does a little bit more research into the pair, and he looks at a lot more stuff, he obviously has a lot more experience than me, since he is a lead educator with IM Academy, and this is his program that he teaches, SmartMonics, using the harmonic scanner and smart money, right? So since he does have this marked up, I will set an alert for this. Okay, so I do have an alert set up on that 1 hour candle that he identifies on the harmonic scanner. And you could see here what I like to do is you're going to use wick to wick to mark up that 1 hour area. And I like to put my point of interest line at the open of that candle. So what we're doing is we're identifying a 1 hour banker candle. We call them banker candles. And that is identifying the order block or the liquidity block, right? This is where we feel money is at. This is a logical area that we expect price to come back to and react. Now, if Manny would not have this area marked up for me here, telling me that he feels if price does move into that area and we get a confirmation, there is a chance it will move down, okay? And again, we're just looking for it to move down to this take profit 1. And as you can see, it already did that. However, since it hasn't moved into our area first, we disregard that. So we can still wait for price to come back up into this area and take the trade. Now, if price had already moved up into our area here and we missed it, and then it moved down to take profit one, we would no longer be interested in this scam, okay? And had Manny not marked up this 1 hour area here for us, since the 1 hour trend is bullish, I would not mark up this chart either, but since he has that marked up for us, I did mark up this area here, and I set an alert right on my point of interest line. And that point of interest line is, just like I said, the open of the banker candle that we're using to identify the 1 hour order block. Okay. Now, just so you know, if you would decide that you want to trade the 4 hour scans, then you would need to look at the 4 hour trend and identify a 4 hour order block, right? And use the open of that banker candle for your point of interest line. But then, since now you're on the 4 hour chart, you may want to take your trades on the 1 hour, okay? So it takes longer to get into trades if you do that. But if you have a job, maybe you got to work 12 hours a day and you don't have a lot of time to do this, then maybe that's something you want to do. Maybe you'd want to take your trades. You want to mark up your charts based on the 4 hour and take the 1 hour trades. For me, it makes more sense for me, since I'm able to trade during the Asian session and a little bit early in the morning before I go open the restaurant up that I own. I like to use the 1 hour on the scanner and to mark up the liquidity blocks. That way I could take the trades on the 30 or the 15 minute. It gives me more candles to work with to try to get my confirmations, right? So that's why most of us use the 1 hour, right? Now, if you was a full-time trader, you didn't have a job to go to, you could even, you could use these 30-minute and 15-minute scans and even take your trades on the 5-minute or the 1-minute chart. But that's not my situation. So that's why I like the 1 hour scans. And I like to take my trades on the 30 or the 15 minutes. And quite frankly, even if I didn't have to go open a restaurant Monday through Friday, I would probably still do it this way, because I just don't like the lower time frames. Things move too fast. And the trade alerts you get and the confirmations you get are less accurate, right? They're more accurate on the 30, right? More accurate using the 1 hour, obviously. And getting your confirmations on the 30 to take your trade on the 30 is better. But if I can't find anything on the 30, I will drop down to 15. Okay, and I'll show you that here as we continue through the strategy. So again, wait for the new scan, check the higher time frame trend, right? So the only way that you do not, like I said, when I checked the higher time frame trend, it was going the other way. So I would not mark up that chart to take a trade. But because the only caveat to that is if Manny has already marked up the chart for us, then he believes there's a strong chance if price moves into that area, it will move in that direction, even though it could be a counter trend, right? Because you see counter trend moves all the time. And when you look at this strategy, Manny has an 85% win rate. So if the guy has an 85% win rate and he has the chart marked up for us, then we're going to use it. However, if he didn't have that chart marked up, I would just skip that scan because the trade was not going with my higher time frame trend. Now, assuming it is going with the higher time frame trend, or Manny has marked up the chart like he had in that case, I'm going to identify the 1 hour order block like I just showed you. That's the banker candle with the wick. Then I'm going to identify the point of interest, which is the open of that banker candle, and that's where I'm going to set my alert. And you can see, guys, that I have my alert set right here. Okay. Now, let me just show you a couple more examples of the trend. So if we're on the 1 hour chart here, again, we're using primarily the 1362 to identify the trend bias on the higher time frame, which in our case here, we're using the 1 hour because those are the scans we're using. And we're taking our trades down on the 30 as low as the 15 minute. And there are times that we will drop down to the 5, but there's only one reason for that, and I'll show you that in a second. So let's just look at some of these other pairs here on the 1 hour chart to see if we could find something. Okay, so when we look at this one here, of course, this would be bearish. The 13 is below the 62. The 62 is still above the 200, but price is down below. So I would look at this as being bearish. Now, sometimes this, of course, is straight bearish. All three are lining up perfectly for bearish. This one bearish. This one bearish, obviously. The 13 is below the 62, and both of them are below the 200. Okay, so this one here is also bearish. I'm trying to find one here where you can go both ways. Okay. And I know there are some here. Okay, so right here, this is an interesting one here in EURCAD. So you could see that the 13 and the 62 are both above the 200, and so is price, which kind of tells us that the long-term trend is bullish in EURCAD, at least on 1 hour chart. But what just happened here is the 13 crossed the 62 down. So if I would get a scan now, for instance, and I came to this chart, this would tell me that I could take a trade either way, right? So if it was telling me, if it was a buy scan, I would mark up this area down here like I have marked up. If it was a sell scan, then I would mark up a higher area, okay? And I haven't done that yet because there's no recent scan now, right? We would need a new scan. So the whole thing is when the scan comes out, what is the bias, okay? And so the bias is telling me that this is bearish now. This is turning bearish. We have what we would call somewhat of a 2x2 on the way down here. Price comes down, pulls back, breaks structure. You don't get a second one. There's just kind of like a change of character, like we call it, right? But because that 13 has now crossed the 62 on the way down, if the scan would have just come out, we would be able to take this trade either way. Okay, the reason I say either way is because 13 did just cross the 62 on the way down. However, both the 13 and the 62, as well as price, are still above the 200. So this tells us if the scan was telling us to buy, we would mark it up to buy. If it was telling us to sell, we would mark up the sell, okay, as well, because there is a chance now that this trend is getting ready to change, okay? So this is one of those charts, if you come to, where you could technically take the trade either way, okay? Let's see if there's any more like that. This one would be straight bullish because the 13 below the 62, but it's no longer above the 200 like it was in the other one, right? Same thing here. Bearish, I'm sorry. That was bearish, not bullish, guys. Sorry if I said that's bearish, right? This one would be bearish. This one is bearish. This one right here now is also bearish, bullish. I'm sorry, this is bullish. 13 is above the 62, and they're both above the 200. Now, if we would have came to the scan right here, and the 13 was below the 62, then we could have taken it either way. If it was telling us to sell, we could have, looked at marking up the 1 hour chart up above, the 1 hour liquidity block, and looking for a sell. But right now, this is just straight bullish. This is another one where the 13 has now crossed below the 62, but they're both above the 200 as well as price. So this is one, again, where you could go either way if this is what the chart looks like when the scan comes out. So I just wanted to show you a couple of them for an example. Okay, so now price moves into our zone, right? We get an alert, right? Price moves into our zone. We get an alert. Let's just put here, get alert, right? And now what we do is we wait for an ATH confirmation on the 30-minute or the 15-minute chart, okay? So let me see here 1 second. What that do now? These are the ATH. These are the red and blue triangles on our trading view chart. Our ATH indicator can be put on trading view. It can be also put on MT4 or MT5. Okay. So what I do is I just wait once price moves into my area, right? Let's say that this was the area up here. Now it's not, but let's just say it was, right? Or let's say that this banker candle up here, right, was our area. And so we put our alert right on the open of that candle right there. And here, this candle comes into the zone, our alert goes off. So now we wait, we drop down to the 30-minute to see if we have any ATH candles, right? So we do have an ATH candle right here. So once, and you want these candles to be as close to your zone, your order block, your liquidity block as possible. But you're going to use an FVG entry, so you're allowed to come outside the zone a little bit if you have to. Now, what happens is if price moves through your zone here, so if price would move through my zone, if that's not what I want. Let's say price moves through my zone, it kind of, consolidates here, or whatever. Then I would still look for a confirmation. Now, however, once if price would decide to break structure on the way up and move through here now, then that would invalidate the trade for me. Okay, so I don't mind if price moves through this liquidity block slightly, because sometimes the banks and the institutions have to go up a little higher because they find money up there, right? What do? Right? They take liquidity, right? They mitigate banker candles and they fill in balance. So sometimes they have to go a little bit higher. So that's still valid for me if I get a confirmation to take the trade down. But if price decides then to move up and break structure after it moves through my zone, then that invalidates the trade for me. I no longer rip the pair. I'll get rid of my order block and everything, and I will no longer look at that trade. So let's just assume, obviously, that didn't happen. Right? Let's get rid of these lines here. And so we get these candles. So what we do is we go to a harmonic scanner, right? And so what we do in the harmonic scanner is, right? By the way, let's do this. Let's pull up CAD. Let's see if we could find something here. Okay, so here's an example that I still have marked up here, right, from Friday. So this will be better to show you this. So right here, like I was telling you, price moved through our zone, okay? It kind of consolidated, and then it almost breaks structure, but it just barely breaks structure, but you could see where the candle closes here. The candle clearly closes above this line. So when you're looking for a break of structure, you use the bodies of the candles. You don't involve the wicks, okay? So if you look at that body right there, the body of this red candle here, let me just put another red line there. And you see here that this does slightly break structure, right? But, it's not that bad. Okay, we need it to clearly break structure. So we would need it to move down a little bit further. Also, you see that it leaves a big wick behind, showing that there was it reacted off of this area. Okay, so this trade, technically, if you're going exactly by the book, you would just invalidate this trade. Okay, now I marked it up, and right here on the 30-minute chart, we get a shift ATH candle. So you could see the ATH indicator comes out, and this came out at 9 a.m. Friday morning. Okay. Now, if you look at the harmonic scanner here, Let's go to CADJPY. This scan actually came out 4 days ago, right? And you can see here that Manny had this area marked up as well. So he had the same area marked up on my chart, okay? And so when you look, just let me show you on the higher time frame, you see that this is in a downtrend, right? So the higher time frame is bearish, okay? And this is a buy scan. But what was the only reason we would disregard that rule is if Manny has this area marked up for us on the chart. And he did, okay? And so right here, you always have to check your time zone here to make sure you're on the right time zone every time you pull up a scan. So right here is that 9 a.m. candle, right? And you can see it's a nice big shift candle. It's a potential shift candle because it has that blue arrow under it. It also breaks all this structure here. So it's what they call a type 2 shift candle. And I have an image of that in my group to show you what that means. So make sure you check for that later and make a note to check for the image of what the type 1, type 2 shift candles are in my group. And again, if you're not in the group and you're watching this, make sure you get with me. So I send you the link to join right away. Okay, so we see here, this is the 1 hour chart. So I'm on the wrong time frame. Okay, so let's go down to the 30-minute. And you see here, this is that 30-minute candle right here. And like I said, it's a type 2 candle because there's a consolidation, and this candle clearly breaks the structure of that consolidation, right? It even breaks this candle over here. Again, break of structure, use bodies to bodies, okay? Now, when we look at this candle, if you put a line on this candle, you see that all of these indicators need to line up for it to be a valid shift candle. If just one of them does not line up, it is not a valid shift candle. Don't use it. Just go on to the next pair. Okay, so the candle obviously is blue. It's a type 1, or a type 2 shift candle. If it's not a type 1 or type 2 shift candle, don't use it. Again, that image is in my group. Okay, the oscillator down below here is blue also. The blue line is above the red line in the stotch, okay? And down here, the blue line is above the red line as well. So all 4 indicators line up. This is a valid shift candle, okay? And I'm probably, so that when I want to do this, this PDF file, I'm going to save this chart image here so that I have that. Because that'll be useful to put in the PDF file as an example, right? Because that is a valid shift candle. Now, so we have a valid shift candle, and it's also the ATH candle. Now, this is also important. Sometimes the best trades, that shift candle and ATH candle will be the exact same candle, okay? Sometimes the ATH will come out one before or one after, okay? Now, if I'm on the 30-minute chart, I'm okay with that because I'm taking a trade confirmation on a little bit higher time frame, being the 30-minute. So if the ATH is one before or one after the shift candle, I'm okay, okay? But if it's more than one before or one after, I skip the trade. Just skip it. You have to follow your rules. You have to follow your trading plan. Your trading plan, what I'm doing is SmartMonics, okay? You not only need a trading plan, you need a trade management plan. What do you do once you're in the trade? Okay. And more importantly, if you have high impact news coming out on your pair, what do you do then? 30 minutes before that news comes out. Okay. So a trade management plan's another video. But for here, we're just going over to SmartMonics. So now what we do is, since we get a valid shift ATH candle, right? Price moved into our zone. It did go through it a little bit, right? But it's still valid. And by the way, it doesn't break the structure on the 1 hour chart, right? Even though on the 30, it does appear to break the structure. And the 15-minute, though, it doesn't break the structure as well. So the main thing, though, with that break of structure, you know, you really don't want it to break on any time frame, especially on the one that you're using to take the trade. Okay. But like I said, this just barely broke structure. And when I look at the 1 hour, right, and I look at the 15-minute, it doesn't break structure on there. Now we're going to take this trade based off of the 30 minutes. So we're looking for the fair value gap. So to identify this fair value gap, you go to the candle, one candle before your shift ATH candle, right? This is your confirmation to get in this trade. Okay, the scan, right? The scan came out. We checked the higher time frame trend. This was going counter trend, but we took it. Why? Because Manny had the chart marked up as well. Had he not had the chart marked up, we would have skipped this trade because it's not going with the higher time frame trend. We identified the 1 hour order block, banker candle wick to wick. We identified the point of interest, which is the open of the banker candle. We set our alert there. We waited for price to move into the zone and get the alert. Once we got the alert, we waited for ATH confirmation on a 30 or 15. We got it on the 30. We confirmed that the ATH is a valid shift candle. It can be one before or one after on the 30, not on the 15. If you're on the 15, it has to be the same candle. If not, don't take the trade. We set a pending order on the FVG, which is the fair value gap. So we're going to use the wick. We're looking for imbalance here. So we know, don't pay any attention to any of these candles after this shift ATH candle. We're going to use this wick right here to identify our fair value gap. So we're going to wait for price to move back down there because we know that at some point, a candle has to be covered 100% on both sides. Okay. And it needs to be covered by a wick or a body. So we see here that this candle is covered up to here on one side, but it didn't get covered yet on the other side because we don't see these candles yet, right? So that's where our limit order goes. So that's where you would put a buy limit order right there. Okay. You would set your stop loss down below these wicks here, like I have it set. You're basically risking about 42 pips, right? We used the take profit one on the harmonic scanner to identify our take profit. This is almost a 1-to-4 risk to reward ratio trade. Now in my trading plan, which this video isn't about, I would close 1/3 of the position once I'm up 2 times my risk and move the stop loss to break even so I no longer have any risk in the trade. Either way, this trade was taken on Friday, so we would have to exit the trade before close. Can't hold a trade over the weekend because price can gap up or down on you. Go right through your stop loss when the market reopens Sunday night, right? 5 p.m. Eastern time. Based on time zone, I believe it's 5 p.m. Eastern time right now. Because we did change daylight savings time just recently, and I think the European Union did as well. So we would have had to exit this before close. It's currently up 64 pips on a 41 pip risk. Like I said, this was clearly going against the higher time frame trend, but because Manny had the chart marked up for us, it was okay to take the trade. Okay, and you see here on that next candle, price comes down and it fills that imbalance right to the pip. Look at that. And this happens all the time, guys. It fills that imbalance right to the pip before it takes off. Now it takes off up, comes back, and it gives you a second chance to get in if you missed the first, right? And then it takes off in the profit, okay? Now, this trade actually was up at one point by 82 pips, about 83 pips. So there's a good chance that I would have exited 1/3 of the position, up 82, and then I would have had to get out of the rest during the last hour of trading, right, on Friday at a profit of at least 64 pips. So this would have been a good trade to take on Friday, okay? Now, I'm not sure. Let me just check Forex Factory here if I could see. So on Friday, March 24th, there was some red folder news here, okay? So you had some red folder news early in the morning, but that was before this trade set up. And then you also had red folder news at 9:45 a.m. on USD pair. Remember, whenever there's news on the USD pair, that affects all the pairs. Okay, so you have to decide what to do there. You're not going to take any new trades 30 minutes before, 30 minutes after. And if you're in a trade, you have to decide what to do before you get to 30 minutes before that alert comes on, right? Whether it's sell half the position, move the stop loss to break even, get out of the whole thing, or whatever, you have to make a decision. Your trading plan has to tell you what to do. So we wouldn't want to take a trade from 9:15 to 10:45. So what happens is this trade actually executes on the 9:30 to 10 a.m. candle. Okay. So this would have been a risky trade to take had you taken it, because it's right when the news came out. So in this case, it didn't affect you, but more than likely, if I was looking at this, I would not have taken this trade because of that red folder news at 9:45 a.m. Right? That tells me not to trade from 9:15 to 10:15 right now. Once 10:15 passed, though, price comes up, goes back down, and it hits our FVG entry again, and that's the 11 a.m. candle. So at this point, it would have been safe to take that trade, knowing, though, that you're going to have to get out before the market closes during that last hour. But with that in mind, this would have been a safe trade to take right here, okay? Now, you always you want to pad this entry by about 2 pips, okay? As you see here that price comes down and doesn't quite hit it, but you're going to pad that entry by 1 or 2 pips, 2 pips at the most. I would say 2 pips. And you also want to pad your stop loss here by 2 pips as well. Okay, so that's, you could see here that I have that padded right there by about 2 pips on the stop loss, okay? So that's kind of what we're looking for. Okay, so that's the SmartMonics strategy, right? Wait for the new scan. We check the higher time frame trend. If it's not going with the higher time frame trend, we skip the scan unless Manny has the chart marked up for us with a valid 1 hour banker candle, 1 hour liquidity block. If he has it there for us, then it's okay to take the trade. If it's not there, you skip the scan because it's going counter trend. Okay, Manny does a lot more research into price action to determine whether or not that is a good zone to mark up. And if he marks it up for us, then we can take the trade. He has an 85% win rate, right? So that's why. But if he didn't have it marked up, it would be no trade. We identify the 1 hour order block, banker candle, wick to wick. We identify the point of interest, open a banker candle, set the alerts. Wait for the once price moves into our zone, we get an alert. We wait for the ATH confirmation on 30 or 15. If we get that, we confirm the ATH is a valid shift candle. Can be 1 before, 1 after, only on the 30, not on the 15. If it is, we set our pending order at the fair value gap entry. If there's no fair value gap entry, so if you find a confirmation, it's a shift ATH candle on the 30, but there's no fair value gap entry, right? Sometimes what happens is on this candle before, this wick may go all the way up to here, or this candle body may be all the way up to here or even higher. Maybe the wick's higher, but the body's not. There's no fair value gap there. If there's no fair value gap, then we have to go down to the 15, okay? Now, if we can't find a valid ATH shift candle on the 15 that has a fair value gap entry, right? This is the only case where we can go down to the 5-minute chart, right? To identify a shift ATH candle that has a fair value gap entry. and we can take the trade on the 5-minute chart. Now, sometimes the fair value gap entry is very far away, right? And in that case, we could use a fib golden zone ratio of 50 to 61.8. This is a little more advanced, but basically what I'm saying is this. Let's say that, see if we could find a, can't really find anything there. Let's say we just have a very big candle here, like this candle right here is, this isn't a very big one, but let's say this candle was a different pair, and maybe this candle was like 80 pips, right? From body to body, the open to close here. So sometimes if your fair value gap's all the way back here, right? Sometimes what you could do is you could take the fib of this candle, right? And you can use the 50% zone to get in the trade. Right? So that would be this line right here. So again, that's a little more advanced. That's once you've been trading for a while. Most of the time, 98% of the time, you'll be able to use the fair value gap entry as your entry point. Okay. And that's where you could set your buy or sell limit order. And that's very good if you have a job during the day, because if you find a trade at night or early in the morning, you can set that order and go do your work, go to your job, do what you have to do. If the alert gets hit, if the order executes, you'll get in. You also have your stop loss and take profit set at the same time, so that if it moves against you, you only lose no more than what, 2% of your trading account. And then if it moves into the take profit, you'll be out of the trade. So this is the SmartMonics strategy in a nutshell, right? So let's see if I could put up here. Right, SmartMonics. This is our SmartMonics strategy, right? So there it is. Again, I'm going to make this in a nice PDF file, and I'm going to put some images here of some examples, and then I'll do another video as well, just for the hell of it. But this is what we're doing with our SmartMonics strategy. This is why you want to become a customer of our community right away. If you do that by tomorrow at midnight, Monday, 27th, actually that would be, say, 11:59 p.m. tomorrow Eastern time. If you do that by then, you'll save $50. If you're watching this video, I also have a special bonus for you as well, where you can save another $50, but you'll have to ask me what that is, because it's only available to people that actually watch this video all the way to the end. So that's a little bonus for people that watch my live videos and they watch the whole thing. So there you go. So this is the strategy that we're using, the SmartMonics strategy. Now keep in mind, I did add an extra step to this. Check higher time frame trend. You would never go counter trend unless Manny has that area marked up for us on the chart like he did in the trade that I showed you. Okay. So again, if you want to get started, get the link from me. You can sign up today or tomorrow by 11:59 p.m. Eastern time on the 27th. You'll save $50. I got a special bonus for you. Will help save another $50. You could try everything out for 7 days. If you're not happy with it, you don't like it, you don't think it will work for you, you can request your money back. Company has a 7-day money back guarantee. As long as you ask them within that 7-day window, you'll get a full refund of your money. Okay. But if you're like me, you're going to plant your flag here and you're going to stay forever. So our community now has over, I think, I put it in the description area of this video, 5,500 members or something like that. It's just growing at a phenomenal rate ever since we came out with the new SmartMonics strategy. So get with me. If you haven't gotten your free week of training with just our community, you can do that for free. I can give you the link to register starting tomorrow. Monday through Friday, 12 p.m. Eastern time. You can see what we're doing. Then you can make a decision to join after that. You won't get the $50 discount, but you still get the 7-day money back guarantee. So Bill Soriano from Pittsburgh. Have a great day, guys. Talk to you soon.